Imagine waking up to breaking news. Canada has officially announced its departure from the G7 and is joining BRICS. This seismic shift would send shockwaves across global geopolitics, rattling the foundations of Western alliances and significantly altering North America's economic and diplomatic landscape. What would be the G7's response? This would definitely be a political earthquake. The G7, comprising the US, UK, France, Germany, Italy, Japan, and Canada, would be in crisis mode. Canada's departure would mark the first major defection from the elite economic club. Diplomats would scramble to contain the fallout, and there would be an immediate push to reaffirm unity among the remaining members. The US and its allies would likely issue strong statements condemning the move, branding it a betrayal of Western unity. Washington, in particular, would view this as an alarming shift toward the China-Russia economic sphere. Meanwhile, this would be a major victory for the BRICS nations led by Brazil, Russia, India, China, and South Africa. Canada's membership would signal a deepening fracture in Western alliances and reinforce the narrative that the Global South and alternative economic blocs are on the rise. China and Russia would celebrate openly, seeing it as proof that US influence is waning. BRICS could leverage Canada's vast resources, particularly in energy, agriculture, and rare minerals, strengthening their alternative to Western-led financial institutions. Before diving deeper into this topic, would you want Canada to join the BRICS nations one day or stay with the G7 and possibly become of the states of the United States? Let us know your thoughts in the comments below. So, what exactly would happen if Canada left the G7 and decided to join the BRICS? We are going to break this down into two phases: the economic impact this decision would have on Canada and the US, and also the geopolitical consequences and how it would affect the world. The moment Canada announces its decision, the US government acts fast. The president calls an emergency meeting. Government officials warn of serious economic consequences. And before Canada even has time to process what's happening, the US fires its first shot: tariffs. Tariffs are basically taxes that one country puts on goods coming from another country. And when the US slaps tariffs on Canadian products, things get really bad really fast. First, lumber prices go through the roof. The US buys a lot of wood from Canada for construction, but now that it's being taxed heavily, American builders start looking elsewhere. Canadian lumber companies see orders disappear overnight. Then, farmers feel the pain. Canadian beef, dairy, and wheat, which used to fill American grocery stores, are suddenly too expensive for US buyers. American supermarkets quickly switch to Mexican and local suppliers, leaving Canadian farmers with tons of unsold products. Then there's the auto industry. Canada is a huge supplier of car parts for the US, but with these new tariffs, American car manufacturers start looking to Mexico and even China instead. Canadian factories, which have been running smoothly for years, now struggle to stay open. Layoffs begin. Workers worry about losing their jobs. And businesses, once booming, now face uncertainty. But Washington isn't done yet. Tariffs are just the first punch. Now comes the knockout blow. The US takes things even further by threatening to cancel trade agreements. For decades, Canada, the US, and Mexico have been part of a major trade deal, first NAFTA and now USMCA, which makes it easy for businesses to sell goods across borders without too many restrictions. But now, Washington hints that if Canada is choosing BRICS over the G7, then maybe the US should rethink its trade relationship. This is huge. If the US pulls out of USMCA, Canadian businesses could lose their biggest market overnight. Factories that once relied on smooth trade with the US suddenly face delays, extra costs, and paperwork nightmares. Investors panic. Stock prices of Canadian companies start dropping as businesses scramble to figure out what to do next. At this point, the Canadian government is in full-blown crisis mode. They try to find a way out, but the US isn't giving them much of a choice. Canada must now look to BRICS for survival. At first, it seems like there's a way forward. China and India, two of the world's largest economies, step in and offer to buy more Canadian oil and gas. Russia proposes new business deals, and Brazil and South Africa increase agricultural trade. Canada starts shifting its economy away from the US and toward its new BRICS partners. But then, the real problems begin. Unlike the US, BRICS doesn't have the same easy trade agreements. Canada is used to shipping goods across the border to the US in a matter of hours. But now, its products have to travel across entire oceans to reach China, India, or Brazil. That means higher transportation costs, longer wait times, and more complicated deals. On top of that, China and India aren't as generous as the US. They demand lower prices because they know Canada is desperate. The oil and gas that once sold for top dollar in the US is now being sold at a discount to China. Canadian companies, already struggling from the trade war, now have to accept lower profits just to stay in business. And then comes the backlash inside Canada itself. Regular people start feeling the pain, grocery prices go up, some products that used to be easy to find in stores start disappearing because the supply chains have been disrupted. Businesses lay off workers because trade is slowing down. The Canadian dollar starts losing value, making everything more expensive. Even Americans start feeling the effects. Lumber shortages cause delays in construction projects. Farmers struggle to find alternatives to Canadian wheat. Some car prices increase because Canadian parts are now more expensive. And for the first time, some Americans start questioning whether the US made the right move. But Washington doesn't care. The goal was never to just hurt Canada, it was to make an example out of them. The US wants to send a message to the world. If you turn your back on us, we will make you pay. Now, Canada is stuck in a difficult position. The trade war has shaken its economy. BRICS is helping, but not enough to replace everything lost from the US businesses are struggling. The future is uncertain, and the big question remains: what happens next? The US pulls the plug on Canadian oil. For years, the US has been Canada's biggest customer for oil and gas. Every single day, thousands of barrels of Canadian crude oil are sent south through pipelines, keeping American gas stations running and heating millions of homes. But now that Canada has joined BRICS, the US doesn't want anything to do with Canadian oil anymore. What does that mean? First, US refineries stop buying from Canada. They start importing more oil from Mexico, Saudi Arabia, and even their own domestic sources. Then, Washington puts restrictions on Canadian oil imports. Suddenly, selling oil to the US isn't just hard, it's almost impossible. And just like that, Canada is stuck with millions of barrels of oil and nowhere to send them. This is bad. Really bad. Because Canada relies on oil exports for a huge chunk of its economy. Now, with demand from the US gone, oil prices in Canada start dropping fast. Canada will now start looking for new buyers. That is where the BRICS nations come in. With the US out of the picture, Canada scrambles to find new buyers. And who steps in? China, the world's biggest oil importer, always hungry for more energy. India, another massive consumer that needs oil to fuel its fast-growing economy. Russia, already a BRICS oil giant, but interested in partnering with Canada for new deals. At first, this seems like a great solution. Canada can just redirect its oil to BRICS and keep making money, right? Wrong. Because here's the problem. Canada was used to selling oil to the US at premium prices. But now China and India aren't willing to pay nearly as much. Why? Because they know Canada is desperate. China in particular is a tough negotiator. They demand huge discounts, making Canada sell its oil for way less than before. India does the same. So even though Canada is still selling oil, it's making way less money from it. And that's a big problem. There's another huge issue. Canada has no easy way to send oil to China and India. Before, selling to the US was simple. Pipelines carried oil directly across the border in just a few hours. But now, Canada has to ship oil all the way across the Pacific Ocean. And that means more transportation costs. Shipping oil overseas is expensive. The longer the journey, the higher the cost. There will also be more delays. It's no longer a quick, easy sail. Transporting oil by sea takes weeks, not hours. There is also more risk when shipping oil long distances. What if there's a political issue? A shipping crisis? A sudden price drop? Canada is now more vulnerable than ever. This is where things get really frustrating for Canada. They have tons of oil, but they're struggling to get it to buyers efficiently. The government starts rushing to build new pipelines to the Pacific so they can export oil directly to Asia. But pipeline projects take years to finish, and in the meantime, Canada is bleeding money. While Canada is struggling, guess who's winning? The United States. Now that they've cut off Canadian oil, the US starts pumping more of its own. They ramp up production in Texas, Alaska, and North Dakota, filling the gap that Canadian oil left behind. American oil companies start making huge profits, and the US becomes even more energy independent. At the same time, Washington starts strengthening oil deals with Mexico and Saudi Arabia, making sure they never have to rely on Canada again. So while Canada is struggling to find buyers, the US is moving on without them. Back in Canada, things start falling apart. The oil industry, which was once a major pillar of the economy, is suddenly in chaos. Oil companies lay off thousands of workers. Provinces like Alberta, which rely heavily on oil, are hit the hardest. The Canadian dollar starts dropping because investors are losing confidence. And worst of all, gas prices inside Canada start rising. Wait, what? How does that happen? Here's the irony. Because Canada no longer has an easy way to refine and sell oil domestically, they now have to import some fuel back from the US at higher prices. Yep. The country that produces millions of barrels of oil is now struggling with gas shortages and expensive fuel. At this point, Canadians are frustrated. Some are angry at the government for leaving the G7. Others blame the US for shutting them out. One thing is clear. Canada is in an energy crisis, and it's not getting better anytime soon. So, what happens next? With the US out of the picture, BRICS stepping in with lower prices, and Canada's energy industry hanging by a thread, the big question is, can Canada recover from this? Or is this the beginning of a long-term economic disaster? Imagine waking up, grabbing your morning coffee, and checking the news, only to see this headline. Canada leaves the G7, joins BRICS. The US hits back. At first, people think, okay, Canada's just switching teams. No big deal, right? Wrong. Because now, something way bigger is happening. Canada's economy is falling apart, prices are going up, businesses are shutting down, the Canadian dollar crashing. And the reason? The US just made Canada's financial system a living nightmare. How? Let's break it down. The US controls the world's money and they know it. Here's something most people don't realize. Almost every country in the world needs US dollars to do business. When countries trade oil, they use US dollars. When companies send money overseas, it goes through US banks. Even Canada, with its own currency, still relies on the American dollar for trade. But now that Canada has left the G7 and joined BRICS, the US isn't feeling generous anymore. So they pull the plug. The first step they take is cutting Canada off from the US banking system. The US government doesn't just sit back and let Canada switch sides. They strike fast. First, they limit Canadian access to the US banking system. What does that mean? Well, imagine you're a Canadian company that does business in the US. You sell products, you get paid in US dollars, and then you convert that money into Canadian dollars to pay your workers. But suddenly, that process is blocked. Now, getting US dollars is slow, expensive, and sometimes impossible. Canadian companies are freaking out. They need US dollars to pay for imports, salaries, and loans. But now those dollars are drying up, and that's just the beginning. The second step will be the crash of the Canadian dollar. The minute the US shuts Canada out, the value of the Canadian dollar starts dropping like a rock. Think about it. Investors see that Canada can't access the US financial system anymore, and they panic. They start selling off their Canadian dollars because they don't want to hold a currency that's losing value. And when everyone starts selling at the same time, the Canadian dollar crashes. This means everything in Canada suddenly becomes more expensive. A gallon of milk now costs way more. Gas prices, through the roof. Rent, higher than ever. Canadians wake up one day feeling rich, and the next day, their money is worth a lot less. Step 3. Canadian businesses start failing. Now let's talk about the real victims of this crisis: Canadian businesses. Why? Because most businesses depend on US dollars for trade. Let's say you own a Canadian tech company that builds software. You sell to clients in the US. They pay you in US dollars. You convert it into Canadian dollars to pay your employees. But now, you can't get those US dollars easily. Your payments are delayed. Your costs are rising because the Canadian dollar is losing value. So what do? You panic. You start laying off workers to save money. You consider moving your company out of Canada so you can still trade in US dollars. And this isn't just happening to one business, it's happening everywhere. Manufacturers struggle to buy raw materials. Restaurants can't afford imported ingredients. Retail stores see fewer shoppers because people can't afford to spend money anymore. The economy starts collapsing. That was just the third step. Now we move on to step 4. Canada turns to BRICS for help. But there's a catch. With the US pushing Canada out, the government turns to BRICS for help. China and Russia offer to trade, but they want to do it on their own terms. Instead of using US dollars, they want Canada to start using Chinese yuan, renminbi, Russian rubles, the new BRICS currency they've been working on. At first, Canada agrees they have no other choice. But here's the problem. Most of the world still prefers US dollars. Why? Because US dollars are stable, trusted, and accepted everywhere. Chinese yuan? Not so much. Russian rubles? Even less. So now Canada is forced to trade in currencies that are harder to use. And guess what? This doesn't fix the economy. It just makes things more complicated. And finally, the 5th step, the collapse of the Canadian economy. If all of this wasn't bad enough, there's one final nail in the coffin. Foreign investors, people who put their money into Canadian businesses, real estate, and stocks, start pulling their money out of the country. Why? Because investors hate uncertainty. If they see that, the Canadian dollar is unstable, Canada is locked out of the US banking system, the country is now relying on Chinese and Russian currencies. They run. And when investors leave, they take billions of dollars with them. The stock market plummets. Businesses shut down. Banks start getting nervous. And now, Canada is officially in a financial disaster. What happens next? With the Canadian dollar crashing, businesses struggling, and foreign investors losing faith, the question is, can Canada survive this financial crisis? Or is it heading toward economic collapse? Let us know what you think would happen in the comment section below. Now, let us take a look at the geopolitical consequences Canada joining BRICS will have. The US had been Canada's best friend, neighbor, and biggest trading partner for over a century. They fought in wars together. They built the world's strongest economy side by side. They shared intelligence, resources, and trust. But now, Canada had switched teams. It was no longer playing for the US and its Western allies. It was standing with China, Russia, India, Brazil, and South Africa. And that changed everything. This results to a Cold War between best friends. The moment the news hit Washington, the US government froze. Inside the White House, in the Pentagon, and across intelligence agencies, phones ring off the hook. Did Canada really do this? Is this a mistake? What does it mean for us? The answer was clear. Canada wasn't coming back. And the US? They were furious. The friendship was over. No more special treatment. Trade deals that had once been effortless now became a nightmare. Canadian businesses faced new restrictions. No more trust. The US cut off Canada's access to top-secret intelligence, shutting them out of the Five Eyes Alliance, a once-strong spy network shared by the US, UK, Canada, Australia, and New Zealand. No more easy diplomacy. The US government stopped picking up Canada's calls, but it wasn't just silence, it was sabotage. Behind closed doors, Washington quietly funded pro-American politicians in Canada, pushing for new leadership that could undo the damage. The US wasn't just mad, they wanted Canada back. While the US fumed, BRICS celebrated. For years, China and Russia had been trying to challenge the US and the West. They had money, they had resources, But they were always missing one thing: a powerful, developed Western nation on their side. Canada? Canada was the missing piece. Suddenly, BRICS wasn't just a club of rising economies. It was a true rival to the G7. Canada's move supercharged BRICS overnight. A new BRICS banking system was created, helping countries trade without using US dollars. No more relying on American banks. No more control from Washington. A BRICS trading bloc was formed, giving nations an alternative to Western markets. Canada's resources, Brazil's agriculture, Russia's energy, China's manufacturing. It was a superpower combination. Tensions between the US, China, and Russia skyrocketed. And Canada was now right in the middle of it. And just like that, the world wasn't the same anymore. But Canada didn't just control resources. It didn't just have a powerful economy. It had the Arctic. For decades, the Arctic was seen as the next great frontier. As the ice melted, new shipping routes opened, shortening travel times between continents. Massive oil and gas reserves were uncovered beneath the frozen ground. And who controlled a huge chunk of it? Canada. Before this wasn't a problem. The US and Canada worked together to protect the Arctic from outside threats. But now? Now Canada was working with BRICS. Russia moves fast, sending its navy and icebreaker ships into the Arctic, claiming more land, more waters, and more control. China starts building Arctic research stations, saying they were for science, but staffing them with military personnel. The US panicked. Canada had always been part of their Arctic defense strategy, but now, they were standing with the competition. Almost overnight, the Arctic turns from a peaceful, frozen wasteland into a tense military zone. The US sent warships to patrol the Arctic. Spy satellites are launched to track Russian and Chinese movements. Canada has to decide, would it let BRICS take over the Arctic, or would it push back? This wasn't just about politics anymore. This was about power, land, and military control. What started as a simple political decision will now tear the world in half. The US and its allies on one side, BRICS, now stronger than ever, on the other. And in between, Canada, the country that started it all. The world is never going to be the same again. Let us know what you think in the comments below.